Good afternoon, ladies and gentlemen. I'm Shilpa Abraham, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the Q3 Fiscal Year 25 earnings conference call of Punjab and Sindh Bank. Please note that this conference is being recorded and all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the Webex panel or press *3# on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the Webex panel or press *3# on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Shri Swaroop Kumar Saha, Managing Director and Chief Executive Officer, Shri Ravi Mehra, Executive Director, Shri Rajiva, Executive Director, and Shri Arnab Goswami, Chief Financial Officer. I would now like to hand over the conference call to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Thank you, Shilpa, and good evening, everybody. And I welcome all the participants in this Q3 financial results con call of Punjab and Sindh Bank. The results were adopted yesterday by the board of the bank, and it was uploaded in the stock exchange website along with the presentation and the press release. Many of you may have already gone through the results in detail, but however, to kick off this interaction in this analyst con call, I'll just like to present some of the few highlights of the bank's performance of the Q3. The overall business growth grew at 10.58%, deposits grew at 7.64%, and advances at 4.73%. The total business as on 31st December stood at 2,23,267 crores. The retail term deposit grew at 10.66%. CASA grew at a muted level of 2.36%. The net interest income has grown by 27.06% in the quarter and 23.70% in the 9 months period. Operating profits grew by 74.73% during the quarter and 58.36% during the 9 months. Net profits grew by 147.37% in the quarter and 54.17% during the 9 months. The net interest margin stood at 2.78% during the quarter, a rise of 24 bips YOY on the quarter, and a 9-month figure of 2.73%, the rise of 23 bips. The return on assets of the quarter was at 0.73, a rise of 42 bips, and a 9-month 0.60% at a rise of 21 BPS. The cost of income ratio, we have been monitoring this cost to income ratio very closely, has gone down to 62.10 during the quarter, a decrease by 1,274 bips YOY, and the 9 months cost to income ratio has gone down by 859 bips to 64.57. We have been continuously doing good in asset quality area, with a reduction of gross NPA percent is now at below 3% at 3.83%, and also the net NPA, which has gone down to 1.25% during the quarter. The provision coverage ratio has also improved to 89.53%, a rise of 137 bips YOY. The recovery and upgradation has been very robust for the bank, which also aided the bottom line during Q3. The total recovery and upgradation during the Q3 was 565 crores, which makes it 944 crores for the 9-month period. The slippages was again another area where we have been able to succeed in our efforts, and the slippage ratio was restricted to 0.34. And mind you, this includes one chunky telecom company which got downgraded during the quarter, and in spite of that, which was 167 crores, and in spite of that, the overall fresh slippages during the quarter was 299 crores, which shows that the robustness of our credit collection efficiency and the credit monitoring mechanism that we have developed. As we continue to de-risk our balance sheet from the corporate to the RAM segment, the RAM percentage has improved further to 54.20%. The RAM grew at 20%, and grew at 20%. Core fee income increased by 26.09%. Capital adequacy without considering the profits of 9 months stood at 15.95%. We are adequately capitalized. During the quarter, as you all know, that we have been able to successfully raise infra bonds of 3,000 crores at a very competitive pricing. On the digital front, the total transactions that happen in the bank on the digital front is now 92%. We have carried out many innovations in digital products, and the latest one, of course, was the digital lending in vehicle loan and in the housing loan, wherein we have created STP journeys and straight-through processing and digitally assisted journeys. And we find that in the November-December period, we find that 60% of our vehicle loan gets sanctioned with this assisted journey, and 48% in housing loan has gone through this digitally assisted journeys, which shows a landmark development in terms of the innovation that the bank has been talking about over the last few quarters. Various transformation projects have been also taken into consideration, which is going on. We are going to implement the CASA back office during the quarter, which will also have the tab banking customer acquisition mechanism, the revamped call center, which will improve the overall customer grievance redressal mechanism, collection efficiency, lead management, and a very ultra-modern customer relationship management. We are also going to invest in the centralized trade finance, which we have been also talking about. The RFP process is about to end, and maybe in 3 to 4 months, we'll have the trade finance module also with us. Apart from that, we'll also have the data warehouse project that we have taken up, fraud monitoring, cyber resolution center, etc. We have been collaborating with various agencies and various organizations for our business, and the latest success that we are getting is on the defense establishments. We continue to do the MOUs with various defense establishments, and during the quarter we did with the Assam Rifles and the other defense establishments. We will continue to expand our delivery channels. We are now present in 351 districts compared to 316 districts which we were earlier 2 years ago. And we are opening new branches where we are not present. So we will be adding 12 more districts during the quarter where we are not present at this point of time. As far as the as far as the delivery channels are concerned, we are going to have further 2,500 BCs, another 50 branches / ATMs. So we will be having additional touch points of 2,550 during the quarter, which will make the overall touch points as of 31st March to over 7,000. And we will continue to increase these touch points and maybe add around 2,000 to 2,500 touch points during the next financial year. So this was in a snapshot what our Q3 results were. And thank you for giving me this opportunity. And we are all we are ready for taking the question answers. Over to you, Shilpa.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to 2 per person, and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press *3#. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. I repeat, if anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. Before asking the question, I request you to please introduce yourself and your organization. Our first question is from Mr. Ashok Ajmera. Sir, please go ahead with your question.
Yes, congratulations, Sahab.
Thank you.
For the, finally, the many of those things which we used to always expect the bank to do have been implemented by you, and the bank has made very good a profit during this quarter. In fact, quarter on quarter, the bank is making a good profit, whether you talk about operating profit or net profit, and at the same time taking care of the asset quality also, which you are improving quarter after quarter. Your gross NPA is also coming down. Net NPA is also considerably has come down. RO has increased. Very good recovery. Cash recovery also. So my compliments to you and the entire team, sir.
Thank you.
Having said that, sir, you have achieved something, like on the credit front, which is generally, my concern, a very good progress, during this quarter. And overall, during the 9 months also, I mean, of almost about 11.52% during 9 months ended December and 5.31% in this quarter. So going forward, do we expect the same rate? Because you have started increasing now your corporate book also. So your corporate book has also gone up by almost about, I think, 2,000 crores during this quarter, and even the MSME book also has gone up substantially. That is also around 1,800, 1,900 crore, while the agri book has gone down, which is the right this thing. So having said that, sir, can you please elaborate little more on this composition of the credit and going forward in this coming quarter of January, March? So at the end of the year, how are we placed? And how do we take care of because the deposits are going down and your CD ratio is now going up to 75.25%. So how the overall mix looks to you, sir?
Yeah. Thank you, Ajmeraji, for your kind words, and we have been trying to perform to the best of our abilities, and will continue to do so. And whatever feedback we get through these calls, interactions, we take them seriously, and we do our strategies accordingly. So we thank you once again on behalf of the bank for your assessment of the results this quarter. And now coming to the question that you have asked is on the guidance on the credit growth. Yes, we have increased the pace of credit growth in this quarter, and we have been increasing over the last 2-3 quarters. So this quarter we have ended at a 14.73% YOY with a sequential growth of 5.31%. We expect that this will continue to grow, and we expect that we will be within the range of 14 to 15% by the end of the current quarter. And as far as the composition is concerned, yes, you have rightly observed that the corporate credit has also taken up a growth of 4.54% during the during the quarter. Yes, which we have been now repricing our assets in a better way. We are now much more confident that the corporates, which were of course very competitive, which will always remain competitive, but we are very selective in our decisions. So we'll hold that. So in terms of the RAM percentage, in agri, you rightly said that we have gone slow in agri, and that is we will observe how the movement happens. But retail and MSME will continue to focus on, and the momentum shall be maintained. As I said, that the RAM growth has been 20.85% during the quarter, and I think we are very hopeful that the pace will continue to happen in this segment as well. And of course, your second point was of course on the deposit side. Deposit, we were not negative as such. We were, of course, the pace of the deposit growth was not as line with the advance growth. But our total deposit still grew at 7.64%. I agree with you that there is a lag between the between the deposit and the credit growth. But we all understand that in the current context, the challenges of deposit mobilization, we are focusing with on this segment, a lot of innovations, both on the CASA front and on the retail term deposit front, and we will continue to focus on garnering more and more deposits so that we can have a comfortable CD ratio. But at this point of time, we don't find while this will continue to happen. So we are estimating that in the deposit side, we'll be around 8 to 9% in the deposit growth, and between 14 to 15% on the credit side.
Very good, encouraging target, sir. Sir, my second question is on the total restructured book. Now today we are very comfortable that way, but what is the total restructured input, including that I think COVID book of around 662 crores and other, and do we have any buffer other than the IRAC norms in the provisioning? So this is, if you can elaborate little more on that, and that aviation, the telecom account also, something on that.
Yeah. Mr. Rajiva will answer this on the restructured front.
Yes, please.
Ajmera Saab, the total restructuring book as on date, we have 1974 crores, out of which the standard restructure is 1512 crores, and of course 462 continue to be NPA. Now, if you look at the stress asset ratio, which is basically a combination of NPA and standard restructured assets, there also the bank has done significantly good. Now, in December 23, the ratio was 8.02. Now, in March, it was 7.56. As of December, it is 5%. So, the combination of both restructured as well as the NPA, that is coming down year on year as well as sequentially.
Okay. Sir, a small question on this debit in existing NPA account, which is shot up to 36 crore, from generally 8 crore, 10 crores. So, is there any specific account on that? I mean, this debit of 36 crore, is there any major account involved in this?
No, I think the 36 crores happened last quarter.
September.
Okay.
Sir, this is in this quarter, sir.
Yeah, this quarter. Which slide?
No, sir. In December, it was in September.
Yeah, debit in the existing NPA accounts was in September. No? You're referring to the slide on movement of NPA, no? I understand that.
Yes.
Yeah, so in this quarter it has been only 1 crore, and last quarter it was 36 crore.
And it was because of change.
Accounting change, yes. That's because of some. That we have implemented a change in the accounting policy on the appropriation of the recovery in September.
Yes,
so that was it was only a accounting change, but it is not something which is to be very.
Okay. So this is only because of the accounting change it has been shown in this quarter.
Yeah.
Not this thing.
Not actual. This 1 crore is actual for the current quarter. That is actual. Yeah.
And on the cash recovery front, you recovered 275 crore.
Yes.
And income booked is 134 crore, which has gone to the bottom line out of 275 crore.
Yeah. That is because we were able to crack 2 big mid corporate segment accounts. On the one was upgraded. It was a road project which got upgraded. The amount was 58 crores, so we recognize the interest now. It is now on standard, and we had a good recovery through a settlement mechanism of another mid corporate account on the hospitality sector. So there also we earned a lot of substantial amount of this is through the recovery mechanism.
And sir, when I'm here, one more small thing. There is old account of that insolvency account as per RBI, that 400 and odd crores on which we are 100% provided for. So any chance of any recovery from that account? 435 crore.
Which one? Sorry.
Insolvency account.
Okay, the one which is now under process. You're talking of that?
Yes.
Yes. We expect substantial recovery in that segment.
Because the
in that account, yes, we expect in Q4.
Oh, that's very good.
Yeah.
Okay. Thank you very much, sir, on this round. And if time permits, I'll come back again.
Yeah. Thank you, Ajmera ji.
Thank you, and all the best to you, sir.
Thank you.
Our next question is from Mr. Saket. Sir, I request you to please introduce yourself.
Sir, firstly, sir, if you could give us some more further understanding on the state of the economy as per the understanding of the current advances. If you could give us some color, what we are seeing in terms of what the export-import data, the fiscal deficit numbers, the government capex, all are pointing towards some somberness in the economy. So firstly, if you could just highlight to us, although we are a mid-sized bank, but we have a good book. So give us some understanding. And when you mention about our corporate loan book growing, if you could give us some more color, how the bid pipeline currently is with respect to corporates, and also which are the major industries which we are catering to and we are looking to cater going ahead.
Yeah. See, as far as the economy is concerned, I think lots of are being written in the various media, and of course the stakeholders are all talking on it. But at the end of it, what we still find is that we are still a growing economy, and the opportunities to grow are considerable in an emerging economy like India. So I will restrict my answer to the how it impacts our bank's overall growth strategy. See, the bank's market share in the entire system of the scheduled commercial banks is not very significant. So the pie of the growth, the pie that is available for growth, I think that's a huge pie that is still available for us. And as we expand our business, as we expand our geographies, as we expand our technological upgradations, as we expand our sectoral growth stories in the corporate segment, I think we don't feel that there will be major impact on a bank of our size of 2,23,000 crores. So we will keep that topic of discussion for some later stage. We will continue to grow in spite of whatever the things that are building around us. But of course we will grow very qualitatively. That's the trajectory we will maintain. That we will of course maintain our due diligence, as we are making lot of efforts to improve our asset quality, our collection efficiency. We will continue to be vigilant in these good times also. In the overall, we still feel it's a good time that in the country, and we will continue to remain vigilant. As far as the corporate loan book in pipeline, we have around 6,000 crores in the pipeline in the corporate loan book segment, which will continue to help us to reach our goalposts for the March, and then subsequently again. The major industries which will come is of course the infrastructure, hospitality sector, renewable energies. So some of the things, these are some of the real estate. Some of course real estate also would be some of the areas which we are looking into.
Thank you, sir. Our next question is from the line of Mr. Sushil Choksey. Sir, please go ahead with your question.
For excellent performance after.
Choksey ji, we cannot hear you. Sorry.
So can you hear me now?
Yeah, please. Yeah, now it's better. Yeah.
Congratulations to the team and management of Punjab and Sind Bank for excellent result.
Thank you.
Looking at your current performance and specifically going to current quarter, along with your infrastructure bond raise, would you elaborate how Q4 is going to shape up the provision coverage ratio, credit cost, SMA 1-2, any slippage guidance? How is loan book looking? Where is the CD ratio headed? How is CASA going to look? ROA, ROE? So I think the picture is emerging that there is elaborate and a positive change towards betterment. So I'm sure from the guidance which you have given so far, seems to be under transformation for betterment. So if you could elaborate something on that.
Yeah. Yeah, thank you, Mr. Choksi, for that assessment. Yes, we have embarked into a transformation journey of the bank on the various fronts. Last year we started with a lot of measures. We consolidated ourselves in terms of structural changes, technology upgradation, innovations, digital processes, and improving our underwriting standards. So that was the consolidation we did last year. Having done that, now we are well trenched and well placed to grow qualitatively. We expect that as I said earlier, the growth story will continue to happen on multiple fronts. On the credit side, as I said, the 14 to 15% growth is a very strong reality. And on the CD ratio front, we have still room, though the CD ratio is increasing quarter on quarter. But at 75% plus, we still have sufficient room to increase the CD ratio. So we are conscious of the fact that the deposits are important. We'll continue to do a lot of door-to-door campaigns, innovate our products, and on the digital front, on the brick and mortar front, all sorts of innovations will continue to happen. And I think the overall growth story continues to be robust for the bank. The asset quality, as I said, we are already the guidance that we had given and the performance that we have achieved so far. The guidance that we had given at the beginning of the year, we have mapped our performance of December, and you will observe in most of the parameters we are in line with the guidance. In fact, we have overachieved in terms of some of the parameters. And going ahead, in some of the areas like on asset quality, the gross NPA should be below 3.5, net NPA should be below 1%, the PCR should be above 90%. It should range between 90 to 91%. The NIM should be between 275 to 280. The ROA should be between 0.65 to 0.70. I think that is the overall overall things that we are heading towards, and I think we will continue to show our results in a very positive manner.
And how is the outlook on treasury and loan book, which is unavailed, outstanding today, and how do you see this volatility supporting us from a perspective? Because now we've raised money, there is ability to lend to longer term loans, and even your retail traction seems better. So if you could throw some light on which area of business are you emphasizing?
Yeah. See, as you have rightly observed, that we now have the stronghold of having some additional liquidity in terms of the bonds that we have raised. So now what we intend to do is select our borrowers, select our customers in an appropriate way. Our asset liability, taking into consideration of the asset liability mismatches that happen in any terms of big gestation lending. So we are much more flexible now, and we are looking for opportunities to lend in various infrastructure projects. We are also looking into some of the strong real estate groups that are in the country, and we'll open there. The co-lending is another area where we'll continue to, which is giving us a good traction in our bank. So the co-lending partnership model is working very well. We are around 3,700 crores, 3,100 crore in co-lending at this point of time. We have sufficient room to increase it further. So overall, the sectoral part, of course, in this overall scheme of things, the sectoral part would be the RAM would play a predominant role, but we will continue to fund a corporate segment. Of course, we will be very conscious of the pricing that the pricing competition that we are in the market while taking corporate, increasing the corporate loan book. So because we have to protect our NIMs, we have to protect our ROAs. So the corporate lending will be vis-a-vis the pricing that we get, but we will look into all sorts of opportunities that we have to lend in the segment.
Sir, what is treasury outlook and what is the capex guidance for digital innovation?
The capex guidance?
capex for digital.
Did you say capex or did you say the treasury
What
guidance?
is the total capital expenditure you want to do for digital transformation for it?
Okay. As first on the first part is the treasury. I think the treasury has been performance of the bank for the last 2 quarters has been robust. Of course, there are market dynamics which play in a treasury performance, but we are confident that what the run rate that has been set for the last 2 quarters will be kept going, unless or until, of course, there is some significant global and geopolitical situation that erupts. So the treasury will continue, performance will be robust, and on the front of the capex investments that we are looking into on the various transformation digital altogether, we have approvals and we have the necessary things to do of at least 400 to 450 crores of investments over the next 5 years. That investment, I repeat, is over a period of 5 years. So 400 to 450 crores of investments are on various fronts, not only digital, it is innovation, it is call center, it is a back office structure, the centralization, all correlated. So the overall package that we look into is, as of now, we are at around 450 crores for the next 5 years.
Thank you, sir. Sir, we have an additional question from Mr. Saket. Please provide granular details of other income and outlook ahead.
As far as the granular details are concerned, I think it is very clearly elaborated in our slide number, I'll just tell you, 15, slide number 15. And the core fee income has grown by 26% YOY. We are sequentially, it has come marginally down. That's okay. That's a part of our day-to-day business. But this will be continuously, also our important factor in terms of monitoring, in terms of generating revenue for the bank, whether it is commissions, whether it is third-party business, whether it is processing fee collections, penal charges, bank assurance business. So all this will continue to play a very important role. As far as the granularity is concerned, I think it is quite elaborated in the slide number 15.
Thank you, sir. Our next question is from Mr. Rahul Sinha. Sir, please introduce yourself and go ahead with your question.
Yes, Mr. Rahul.
Hi, sir. Good evening.
Good evening.
My question is, the bank's GNPA and NPA ratios have been declining.
Sorry, GNPA and?
NNPA, sir.
Net NPA. Okay. Yeah.
It has been declining steadily.
Yeah.
How many quarters do you anticipate this trend will continue, and what is your medium-term forecast for asset quality?
Yeah. So I think if you see our trends, it continues to be on the downward trend. As I already gave you a guidance, that by the end of March, we should be below 3.5 in gross NPA, and net NPA we should be below 1. That's for the March 25, which we think we can achieve. And in the next 3-4 quarters, I think we'll be below 3% very, very shortly, and bring the net NPA level down as much as possible. Because our credit growth is now robust, slippages are coming down significantly. We don't have too many bothering accounts as of now. One, of course, is 2 accounts which are already declared through the notes. That one is a court-related account which is not classified as NPA. That can go away. That can be NPA anytime, depending on the court. But we are adequately provided for in that account. So, and another standard restricted account of around 15-16 crores. That account has also been provided for. So apart from these 2 accounts, we don't foresee too many slippages in the overall loan book. The corporate book has been stabilized quite strongly. What we find a bit of a stress still in the MSME segments. We will continue to monitor that. And I think someone is on. Yeah, we will continue to monitor the collection efficiency of our MSMEs also, and retail are being monitored very closely by us. We will continue to keep focus. The overall collection efficiency of the bank has now moved on a sequential basis from 92.87% to 94.77%. That's the way we are working on in the granularity. And in fact, in the agriculture segment also, our collection efficiency, which is the most difficult area, there again also the collection efficiency is improved on a quarter-on-quarter basis. So this downward trend will continue to happen. Where it will reach is too early to say at this point of time.
Thank you, sir. Our next question is from the line of Mr. Ashlesh. Sir, please go ahead with your question.
Sir, a few questions from my side.
Yeah.
Firstly, the corporate slippages in this quarter have increased a bit to 167 crores.
Yeah.
Can you share some details of which account has slipped?
Yeah, this is that industry telecom company you all know about.
Okay, sir. I think I was under the impression that this one had slipped in the previous quarter.
No, for our bank it did not slip. We did provide for the entire amount. We did provide adequately in September, but the actual slippage happened in 8th October this quarter.
Okay, got it. And sir, any reason for the sharp jump in yield on advances in this quarter?
Yes, some of it has been impacted by the strong recovery that we have had in one or two mid-sized accounts, which increased my yield on advances. The interest income has been booked in those two accounts.
Okay, is it possible for you to quantify the interest recovery?
Yeah, that's mentioned in the movement of NPA, na? So it's 134 crores. The slide on movement of NPA, I don't know which numbers. I'll just let you know.
No, that we can see, sir. That is okay.
Yeah, slide number 22. If you will see that, cash recovery income booked 134.
Can you break out the interest part of this recovery? Is that possible?
Yeah, more or less the entire amount is interest recovery.
Okay, got it. And sir, there was a good traction on the recovery income as well this quarter.
Yeah.
It sits in your non-interest income.
Yeah.
Can you share some details on which are the accounts where you saw recoveries?
We cannot share you the name of the accounts, but these are all mid-sized accounts, and these are which account? So this was a hospitality sector account which we earned for the TW.
Understood, sir. Sir, and just last one, how do you look at the outlook for bad loan recoveries for the next year or two?
For our bank?
Yeah.
Yeah. As I told you, yes, the recovery will continue to remain robust. In the guidance, you must have seen that for the financial year 24-25, we had given a guidance that 1,000 crores is our guidance. We have already achieved 940 or 944 crores already in 9 months. So we'll surpass that. And the next year, we expect that this run rate of 1,000 crores is achievable.
Perfect, sir. Thanks a lot. Those were all the questions I had.
Thank you, sir. Our next question is from the line of Mr. Chandra Prakash. Sir, please go ahead with your question.
Yes, Mr. Prakash.
हेलो नमस्कार
नमस्कार
हाँ सर मैं प्रकाश बात कर रहा हूँ
हाँ बताइए
सर एक्चुअली मैं तो सर बहुत छोटा सा इन्वेस्टर ही हूँ सर इसमें सर पैसा लगा रखे हैं तो सर उसी का थोड़ा जानकारी लेनी थी सर बाकी सर आप लोगों के बीच में सर अच्छे से बात नहीं कर पा रहा हूँ इसके लिए सर वेरी सॉरी।
अच्छा, हाँ
हाँ
हाँ,
तो
सब
सर
ठीक
ये
है। आप शेयर होल्डर की पर्सपेक्टिव से पूछ रहे हैं शायद, बिकॉज आपका साउंड थोड़ा
जी
सा कम आ रहा था, इसलिए मैं समझ नहीं पाया है। बट अब बैंक
जी
अभी स्ट्रांग है, बैंक के पास कैपिटल सफिशिएंट है,
जी
बैंक का प्रॉफिटेबिलिटी
जी
एक
जी
साउंड ट्रैक में है,
जी सर
एसेट क्वालिटी मींस एनपीए भी काफी रिड्यूस लेवल में है, बैंक बिजनेस ग्रो कर रहे हैं। तो हम उम्मीद
जी
करते हैं और आशा करते हैं कि ये ट्रेंड हम बरकरार रखेंगे।
ठीक है सर। मैं सर ऐसा ही सर बस यही सब चाहते हैं सर। एक्चुअली क्या है कि मैं समझ नहीं पाया था और मैं सर इन्वेस्ट कर दिया हूँ और बाकी अब
हाँ,
क्या ही बता पाए सर। ज़्यादा अच्छे से बात भी नहीं कर पा रहे हैं आप लोगों के बीच में। तो सर मैं यही है कहना चाहता हूँ सर ये अपना सर ऐसा भी है क्या सर, ये मर्ज तो नहीं हो रहा है सर बैंक?
नहीं अभी तक तो कोई खबर नहीं है हमारे पास।
ठीक है सर। मेरा सर यही सर बस पूछने का सर
धन्यवाद,
प्रश्न यही था।
धन्यवाद।
Thank you, sir. We will wait for another minute to see if there are any more questions lined up. So we have a question from Ms. Sakshi, an individual investor. She wants to know, how are you balancing growth between rural and urban markets, and what measures are in place to deepen penetration in semi-urban and rural areas? Second question, are there specific partnership or initiatives planned to expand your digital lending and other innovative offerings? Third, could you provide details on the adoption and performance of your newly launched digital loan products, PSB E-Apna Vahan and Ghar loans?
हाँ, Mr. Mehra will answer all the questions already.
Good afternoon, everyone on this side. As far as the penetration in rural and semi-urban areas is concerned, we are growing equally in all the segments. You can see that our MSME growth is almost on the same lines, because if you go for the agriculture as well, food processing industry is doing well. For our growth, that's quite substantial. Numbers are there. And similarly, as far as semi-urban is concerned, we have developed some products and curated some specialized products as well. Going forward for the digital lending, yeah, we have partnered with some of the fintechs and specialized, you can say, developers who are developing softwares for us, and we are taking the journey forward. And the response to our digital lending, that is particularly the car loan and home loan, is quite good. And the journey doesn't take more than 15-20 minutes to get a loan sanctioned. And with regard to this going forward, we are also coming up with this MSME loan up to 25 lakh rupees for this digital front. And once it is launched, stabilized, we'll be taking up to maybe somewhere around 1 crore rupees or so.
Thank you, sir. Our next question is from Mr. Rohan. There are three questions. First, we have seen a decline in AAA rated exposure. Is it because of downgrade or repayments? Second question, gold loan is very small in our portfolio. Any plans to scale it up? Third, we still have an elevated C/I ratio at 62% as compared to peers. What is the ratio outlook for next 2 years?
Yeah, I think the first question related to the exposure, it's a conscious call that we are rebalancing, churning our corporate credit portfolio within the top rated accounts. Yes, and wherever pricing, we are very concerned about our pricing. While the external rating is very important, and AAAs are very sound and resilient in terms of repayment, but the pricing is also very demanding. So we are churning our books, and we have got repaid some low yielding assets in the AAA category. It is not due to the downgrade; it is due to the repayment that has happened in a big AAA rated account. So we are, just because the pricing was not adequate for our bank. So that is the number one question. On the gold loan front, the gold loan, yes, the portfolio is small. In fact, actually, we have shown in the portfolio of retail lending, if we add the agriculture gold loan, the total portfolio is 2,000 crores. Yes. 1,600 in the agri gold loan. So 1,600 plus 1,000 on 2,000. Total gold loan 1,600. Okay, 1,600 is a total gold loan. Yes, in spite of that, the base is small. We have now taken a view that we should expand in this segment, and we'll continue to expand at the rate of 20 to 30%, in fact, 25 to 30% on the overall gold loan portfolio, because it's still a safe way of lending. Yes, I appreciate the point that the cost to income ratio is still high and compared to our peers. We are at 64.5 on a 9-month period. We expect to be around 63 to 64 by the end of the year and bring it below 60% by another 1 year and at least 2-3% down for another. So in another 2 years down the line, we should be around 56 to 58%.
Thank you, sir. One additional question from Mr. Rohan. Can you please also give some color on the co-lending book that we have built?
Yeah, Mr. Mehra will answer.
Yeah, as of now, we have a portfolio of 3,100 crore rupees in co-lending, and 10 partners are there. And going forward, maybe somewhere around by March 3,500 will be the volume of co-lending.
And the portfolio is behaving very well.
Yeah,
we have absolutely
no issues.
No issue as of now.
Thank you, sir. Our next question is from Mr. Sushil Choksey. Sir, please go ahead with your question.
Yes, Mr. Choksey.
Successful in raising the first infrastructure bond. As I can sense from your commentary that credit pipeline seems healthy. Will we look in the current deposit market situation, another infrastructure bond possibly in the current quarter?
Yeah, it's a relevant question because we were successful in raising the bond and now we have followed it up with a good performance. So there is always a scope to garner some more. But the first, as far as the capital, I'll cover this question in 2 ways. On the capital raising plan that we also have and this. So the first endeavor of a bank or this quarter is of course for the QIP, and we will be going at some time during the quarter. The merchant bankers are on board, the legal consultants are on board. We'll be starting the kickoff very soon. We'll be on the ground, our feet will be on the ground very soon on the QIP. So at an appropriate time in the quarter, we will like to make an effort to garner the 2,000 crores of QIP. Notwithstanding this effort, we will also keep the options open for raising another round of 2,000 crores depending on the market conditions, but primarily because primarily keeping in mind our requirement on the credit growth. So if we feel that and we are getting a better pricing, we will of course look for it. But for that, as I said, to be categorical in our answer, the first option will be QIP, and the second option will be the infra bond of 2,000 crores.
So does your QIP more related because of SEBI holding norms which you have to dilute to 75%, or it is you need capital for growth?
Yeah, I cannot primarily, of course, the SEBI requirement because we know that we have 5 banks are in that category which require to bring it down. So of course, 2,000 crores will bring that percentage to around 5 to 6%, 8%. It'll bring around 8% down. So therefore, we will explore that option. As far as per se the capital requirement, if you ask me, see the capital adequacy as of 31st December, though has shown a sequential decline, but if you add the 9-month profit, the capital adequacy is at 16.97%. That's close to 17%. So therefore, as far as the capital adequacy requirement, we are very comfortable. Okay. So, but it's always good to explore. One, of course, is the compliance issue of the SEBI, but also it is good to have more QIP, more capital in your books, and because we'll be not only growing quickly, we'll also be investing quite substantially in technology upgradations and various processes. So it will be a combo of all those 2-3 factors for which we will be in the market for QRP.
Thank you, sir. Our last question is from the line of Ms. Myra. She has messaged me asking, what is your expectations for the upcoming budget?
Yeah, Mr. Rajiva will answer.
As far as banks are concerned, I think some suggestion goes from the IBA side, but informally, of course, as banks, we would like to have measures whereby the economy grows so that we also have room to grow. And of course, government and both the regulators must be looking at the current scenario of the inflation also. So overall, some measures whereby the growth is boosted, there is a capex in the market, the inflation is under control, and so that the environment is conducive for the growth of financial sector banks like us.
Thank you, sir. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 99306-25104 or mamta.samant1@dentsu.com. Details are mentioned in WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference call today. You may now disconnect your lines. Thank you. Have a good day ahead.
Thank you all. Thank you, Shilpa.
Thank you, sir.